Hello and welcome to this week's Australian Stock Market Report. Now this week we're going to look at 3 areas used to entice investors to trade and why you need to be wary of them. Then we'll get into the Australian stock market so I can share with you my thoughts on where it's heading, along with answering your questions and looking at stocks for you. I'm Gillham, the Chief Analyst here at Wealth Within, and we're Australia's most trusted stock market educators. Before we move on, thank you for showing your support for our channel and hitting that subscribe button. Remember, as you subscribe, click the bell on the right of it so you keep up to date with our latest videos. Also, remember to tune in to our live Australian stock market show, which is on every Tuesday, 7 to 8 p.m. Australian Eastern Time. Now, this is the show where you get to ask us, the stock market education and trading experts, to look at your favourite stocks and answer all of your questions. Now, last week, ASIC released an article warning people of the common tactics used to get individuals to invest in shares. The article, titled "Don't Believe the Hype," goes into 3 areas that are used to take advantage of retail investors. Now, I have voiced my concerns about these practices in the past, as they have little to do with clients profiting from good investment strategies and everything to do with the provider making money regardless of the outcome for the consumer. Now, if you want to build your wealth, then according to ASIC, you need to stay away from the following strategies. The first one is pump and dump schemes, which occur on a daily basis in social media and online chat forums. Now, this practice involves someone purchasing shares in a company at a low price and then telling everyone else to buy in order to create a snowball effect that causes the price to rise significantly. This is known as the one more fool theory, where a buyer hopes one more person will purchase at a higher price than them so that they can sell and take their money. Now, another strategy is the gamification of trading, which typically attracts younger investors who get caught out with applications on their devices that make buying and selling shares easy and fun. Essentially, it is intending to make investing more like a game than a well thought out investment strategy. Copy trading is also another strategy that ASIC warns investors to be careful of, and this involves copying the trades of someone else using an automated trading software platform. While this might seem attractive, I'm sure most can see the concern with putting their future into the hands of a total stranger. Unfortunately, I have talked to many investors who've tried this and suffered severe losses or had their accounts wiped out. Now, according to ASIC, it's important that you don't fall prey to the promise of high returns when you approach about these strategies, and to understand what you're buying so that you recognise the risks. Now, whilst I appreciate the desire to gain financially without a lot of knowledge or putting in a lot of effort seems very attractive, it tends to create a false sense of reality to the point that many ignore the inherent risks. Now it's time we take a look at the market, and as usual we'll start with what were the best and worst performing sectors last week. Well, the best performing sectors, that included energy up 2.01%, followed by communication services up 1.29% and information technology up 1.26%. The worst performing sectors included utilities, and that was down 1.90%, followed by consumer discretionary, down 1.26%, and consumer staples, that was down 0.86%. The best performers in the S&P ASX Top 100 stocks include alumina, that was up 19.10%, followed by S32 up 13.10%, and Lynas Rare Earths up 9.97%. The worst performing stocks included Altium, and that was down 7.79%, followed by Wesfarmers down 7.11%, and AGL Energy down 5.87%. So what do I expect in the market moving forward? Well, let's get into the charts for our S&P 500 All Ordinaries Index update for this week. We'll also answer your questions and look at the stocks that you've chosen for me. Well, last week was the reason why I keep saying to everybody to wait for confirmation of a move rather than speculation of a move. If you look at our market, it did go up last week, and we'll look at the charts in a second, but it really honed in on why we need to wait for that confirmation, because whilst I think our market is looking or searching for its 2-year high, it does need to go down into a low. We really do need to make sure we're waiting for a move before we actually exit or before we actually buy. But let's go and have a look at the charts anyway and see what's actually going on. As normal, you've got the monthly chart on the left and the weekly chart on the right. And I'm going to have a quick look at the monthly chart. Now, obviously, we're only 3 days in. This bar here, or the last monthly bar, is only a few days of September. Remembering Friday was the 3rd of September, so that is only 3 bars, but we're still seeing that little tipping over here of that momentum. It's slowing down the market, which means basically the market trades in points per day, or so many points per day. And while it's trading through here, it's roughly trading at around the same amount of points per day, whereas what's happening here is the points per day is slowing down, or it's trading less points every single day than what it was through here, and eventually it'll be more bearish when it does start to move down that way, or down towards its low that I'm expecting. So let's go and have a look at the weekly chart. But so now where the monthly chart is telling us it's slowing down a little bit, but it doesn't necessarily say it's actually falling away. And here's the weekly chart, and I've left that arrow on that I did many weeks ago when I was saying I thought the market could go possibly even get up to that 8,600 points, but somewhere between sort of 8,000 and 8,600. So our previous all-time high is there at 7,902. And we've had this one big week down a couple of weeks ago there through there with a 197-point range. The next week, if I just bring that right up so you can see it a little bit easier. So 2 weeks ago, we had a 93-point range. It tried to push up, but it came and closed right back down sort of in that bottom half of the bar, closed at 7760. Not really wanting to push on. At this point in time, we could have thought, well, hey, the next week could be trading down. And you can see the volume in there is reasonably high on those downward moves. So you'd think it probably could start to see the market moving down, where you can see the volume's a bit lower there on those upward moves, which this is suggesting that the sellers are a little bit more voracious, even though it closed higher through here than it opened a couple of weeks ago. And then came last week where we opened, pushed right up, or we pushed down first early in the week, Monday and Tuesday were down. Then the rest of the week we pushed up, and closing there on Friday there at 7,826.7 points. And volume was still reasonably good. So to me, this is really auguring like we might get one last sort of move up to a high. Now, I would expect if we start seeing the markets moving up this week, if we do get another green bar this week, where it means it needs to break that high there of 7,841, that we do get through that 8,000 odd point mark and get sort of up over the next couple of weeks. But I'm not really confident it's going to be a long move through here. I mean, I did have that. I mean, the high there, it's got this the 3rd of September. I wasn't picking a specific date. It was just relatively but we could be seeing that move out to a little bit sort of out there. But we might get a move up for a couple of weeks before it does move down. And the reason why I say that is most lows in our market will happen in September or October. And it's pretty much... It's around about 70% of the time September or October, or both of them, are down. And so it's strong probability based on history that our market will fall away in September or October. Now, currently looking at September, as you can see, if we go back to the monthly chart, you can see September is currently closing at 7,826, opening at 7,823. So it's an up month at the moment. So for September to be bearish, this will need to, the close here will need to go down, and we need to start creating a red bar. But again, to me, the probabilities suggest that September, October will be a low. It's normal on our market, September, October. Sometimes November. November is probably about 30-40% of the time we'll have a low, but it's fairly high probability that we'll have a low in the next couple of months. So what am I expecting right now? Well, what we could be seeing on our marketplace, and again, it's just speculation of what could be happening. We may be seeing this sort of thing happening up into 8,000, 8,100, even 8,200 points there. I don't think it'll go too much higher than that before it starts to move down, somewhere between September and October, somewhere in that sort of bracket here. So all this does is not saying that the market's going to crash. Let me get rid of that and delete that. I'm not saying the market's going to crash. And that's definitely not what I'm not saying. What I'm saying is now you could be buying before it starts to move down. And this is a real sin that a lot of traders do. They see the market moving up and they go, wow, it's moving up again, I'll jump in on stocks. And they start to buy in here only for the market to move up a tiny little bit and then start to fall away. And then they got stock in stocks that they're not making any money out of, or they lose because they're hanging on to stocks as they fall away. Because what I know most people do is they hang on way too long on their stocks. or they exit way too early. They just jump in and then jump out because they're afraid of what's happening. But generally the biggest sin is that they hang on way too long, and they end up turning a good trade into a long-term buy and hold, if you know what I mean, and you may have done that yourself. So right at the moment we're on that point there where we are on how do I say it, we are close to that pivot point on the seesaw that I keep mentioning to you on these reports. Now, is it going to happen this week, next week, or in a few weeks? I don't know, but all I know is that right now the risk of buying into the market is starting to get a little bit too high. We need to be very careful of what we're buying stocks that aren't pushing up really fast, and we might see that real burst in that last little few weeks, and short-term traders might take advantage of that. But then it gets back down to risk. It's far better to get a stock that's fallen heavily over a period of time that's now starting to move up than try and get in the one that's been moving really fast and trying to eke out those last few percent of profits. And I think you really understand what I mean. But right now is now the time to just sit back and really watch what the market's doing, because I don't think you're really going to miss out on too much, because we are looking at, it's been March last year where we had our last major low, and we've almost had no pullbacks since March last year. So we're talking about 18 months, over 18 months. So we are due for a low, and it's due to come in the next few months. And that's really what I'm going to say at the moment. Just be careful. I'm also not saying to exit your stocks. I'm not saying just to panic and just get out of everything and sit in cash. That's not what I'm saying too. I know some people do that, and please be very careful. Only ever exit a stock because the stock itself has told you to get out of it, not because of what the market may be doing, and I hope everybody understands that. Now's the time we need to get into the questions that you've given for me, so let's get into that right now. The first question we have today is from Mark, and Mark's asked, can you explain how the top 20 shares on the ASX are determined? That's really simple, Mark. It's the basic premise is called market capitalization, or basically how big are the companies. So when you're looking at companies, there's a value, there's an intrinsic value in a company, like how many assets it's got, etc. So for example, what is BHP worth in terms of all its assets that it has, its revenue streams, etc. And they also have stocks that are available to buy and sell. So if you look at that, so the stock price is based on the valuation of the company, or what our perceived value is of BHP. So if BHP grows, we may pay more for the stock price, but that's not necessarily exactly how it becomes under market capitalization. Market capitalization is really simply the multiplication of the stock price by how many shares are on offer. So if BHP the price is $1 and there's 1 million shares on offer, that means the market capitalization of BHP is $1 million. Now, obviously, BHP is a lot more expensive than that in terms of its share price and its market capitalization. But that's really as simple as all you need to do. So you can go to any stock website on any stock, or even on the ASX, and get the data and say, well, how many shares are on issue, and then multiply that by the current share price, and you'll be easily, that simple calculation, you'll be able to work out what the market capitalization of a stock is. But as I was saying a little bit earlier, the price of the share determines how big or small a stock is, because obviously it's our perception of what that share is worth. So if we think a stock should be worth $50 or $100 or $5, then that's what we're paying for that. So again, it's just basically the calculation is share price times the amount of shares that are on offer. It's pretty simple calculation. The number one stock in Australia just has the highest market capitalisation and listing from there. So the top 20 is the top 20 by market capitalisation in order of that. So you can see there, all your banks are in there, your BHPs, your Rios, etc., all in that sort of top 20 stocks. And the top 20 stocks, and you need to look at it in terms of how you do your portfolios, etc. If you look at the top 20 stocks in terms of market capitalisation as a percentage of the total market capitalisation, you're looking at a huge chunk of the All Ordinaries Index is just the top 20 stocks. And if you look at the top 50, I think it's massive. I can't even remember the exact figure for the top 50, but I think it's sort of like 70% of the top, the whole market capitalisation is just the top 50 stocks. I haven't looked at those figures for a little while, so I can't tell you exactly what they are now, but I know the top 20 is a massive chunk of the All Ordinaries Index itself. That's why when they're going up, the All Ords goes up. If they're going down, the All Ords is going down. And it's why Janine and I say if you're talking about materials and financials are both going up, which are the two largest sectors by market capitalisation, position in the whole ordinaries index. If those two sectors are going up, the All Ords are going up, and if those two sectors are going down, the All Ords is going down. If they're going against each other, means one's going up, one's going down, the All Ords is more flat. But financials is by far the biggest sector in the All Ordinaries Index by market capitalisation, and why it's such an important sector for us to keep our eyes on. But thank you for asking the question. The next question is from Alex, and Alex says, "Hi Dale, I was wondering if you could look at Tyro, as I just purchased it as it was on the rise in the past week, and with the goal of long-term buy." So thanks. So let's go and have a look at Tyro payments. Now on your screen I've got Tyro payments there, and a lot of people are trying to go into this buy now, pay later space and thinking they're all going to be an afterpay, and they may be an afterpay. I'm not sure why you've bought Tyro payments at this point in time. I mean, it doesn't look like it's, how do I say, looking at the monthly chart, you can see we don't have a lot of history, but look at that. It's this area here is just huge. It's right across that sort of $3.80 level, and you can see where that horizontal line, if I put my horizontal line on that close there, it hasn't closed above that level, which is $3.84 ever in its history. So that's really the highest close it's had. But you've seen 1, 2, 3, 4, 5 bars go through that level. It's a real strong level. So until it got through that, I wouldn't have my money in this stock. So I'm not sure why you bought it. And right now it is that very much moving sideways through here. But again, a lot of people are speculating that some of these new payment fintech type of companies are going to do really well. I think there's going to be a lot more consolidation in this area. There's a lot more regulation, definitely a lot more focus from ASIC in this area. I'm not super negative on it at the moment. I just think you probably entered a little bit early, but long-term buy and hold, yeah, you may be right, mate. You may really be right there, long-term buy and hold, but you probably may get a lot of sideways movements or short-term volatility over the next sort of 12 months-ish. But again, for my mind as a trader, it's probably a little bit early, but again, I would have waited till it got through that $3.80. If you can get up to $3, past that up to $4 area and start to move strongly there, then I think that might be a really nice buy. But I just think it's probably just a little bit too early at this stage. But again, good pick. Look at the fundamentals of it. If you do like the fundamentals of it, if it's looking at good profits, good EPS, good earnings, good forward growth projections, then I think there's no issues with this sort of stock, because it is one of the better ones in that space, or that broad space where we'd call the sort of that fintech buy now pay later type space. There's some there that I just don't like at all, but thank you for asking the question. Now we have a question from Sahil, who he states, Warren Buffett also says don't listen to analysts, listen to yourself, may go up, may go down, which is what he's saying. Yeah, you're right, absolutely. Warren Buffett does say that, and I 100% agree with Warren Buffett. Don't listen to analysts, and that's coming from an analyst. I'm very upfront with that. I mean, I know in my book, this month, How to Beat the Managed Funds by 20%, which you can get for free on our website. You just got to pay the shipping. There's a button right up the top on the home screen. On the top left, you just click on it and we'll send it out to you for shipping. But I say in that book that the statement I use is basically don't trust anybody, trust yourself. Basically test everything, trust nothing is the statement I use in there. So everything, and I say to people, don't just believe what I'm talking about in my book. Try it for yourself. If it works for you, use it. If it doesn't, then either you haven't really understood what I've talked to you about, or it just doesn't work for you. Either way, but don't trust what I'm talking about in my book. And I've often said on these recordings over the last few years since I've been doing them, don't trust what we're talking about. Play with it, test it, see if it works for you. Always do your research for yourself. Always know why you're buying, why you're selling, and how you're managing your payment, your trading or your investing. Because most people don't. They do trust the experts, and I 100% agree. But when you have statements like that, always look about what is the intent of that statement too. Now, Buffett says don't trust analysts, because obviously he has a lot of analysts giving him reports and trying to tell him what to do. But Buffett's very knowledgeable, and he knows what he's doing. So if you don't have the knowledge, then who do you trust? Because if you don't have the knowledge, then how can you trust yourself? And that's why it's critical to get a good education first. And I find people put their faith in analysts. And as ASIC said at the start of this report, the pump and dump schemes. Because I see that all the time on chat forums, so many times, and I don't go to chat forums at all, but I have people coming to me all the time. I go, how did you buy that stock? Or what did you do? Where where did you get that? I saw it on a chat forum, and people believe that because somebody else is talking about it, that somebody else has actually done the research on that, and the research they must have done must have been valid because they must have more knowledge and experience than I have. So I'll just play on their knowledge and experience, and I'll buy that stock that they're actually talking about. But that may all be a whole lot of BS. And I see it so often, whether it's a chat forum on YouTube. You know, ASIC's cracked down over the last week or so. They came out saying, you know, those videos that you watch on YouTube with all these people, people in their lounge rooms or in their bedrooms talking about stocks, what you should buy, you know, stocks you should hold long-term, stocks you could trade, stocks you're going to 10x your profits from, all of that. They're going to crack down on all of those people because they're not licensed and they're not educated in actually doing it. But people put so much faith in those people, and that's why so many people lose so much money from watching YouTube, and why I said what I said last week about YouTube. It really isn't the place for you to learn how to buy and sell and to trade. Yeah, you're going to get some information, but you're not going to be able to trust yourself. You're going to be really, really hit and miss. So thank you for bringing that statement up. I really, as I said, there's a lot of stuff that I agree with Buffett on. I don't think I'm necessarily a genius above Buffett or anything else. I'm just an analyst, and I have a way of trading and investing that makes trading and investing simple for a lot of people. I teach traders, I mentor traders, and I help people get their goals. And this is really what we're about. And really it's about educating yourself first so that you can trust yourself. Because again, you know, it's like jumping in the car when you've never ever driven a car before. How do you trust yourself going flat out like that? You know, it's you need to ask your question, who you're putting your faith into. So thank you very, very much. For putting that question out. If you do, interesting this week, just before I move on, we had so many comments on our videos, so many comments, and a lot of positive comments, a lot of comments on all sorts of certain things, but we only had 3 questions, which was really, really interesting to me. Normally we have way too many questions for me to answer, but a lot of comments on it. And I want to just say to you, with the comment section below on this video, this is not a section for you to start putting stocks that you love on there and trying to ramp your stocks. It doesn't happen. I delete them all, because that pump and dump stuff is what I'm really dead against. And so I'm 100% behind ASIC. So if you put a stock code down there and you say this is going to shoot through the roof, you will get deleted from this post, because you are not necessarily an expert, and you're not going to use this forum to pump and dump stocks. And you know, and it's also not a forum for you to, you know, give other people advice on what you should be doing, because again, you're not necessarily qualified to do that. So generally, if people are giving other people advice, I will also delete those questions, because people are asking questions of us because I'm a licensed expert and Janine's a licensed expert. We're fully qualified, fully licensed by ASIC, and we're very experienced. And when people ask us a question, they expect us to answer it, and that's reasonable too. But we can't answer all questions. I do love people posting, you know, their comments below. Please do that. If you're going to be negative, you'll also get deleted. If you're derogative to anybody, on whether it's Janine, myself, or anybody else, any other comments, you will get deleted. It's not a chat forum for you to have fun in, and we're very strict on these rules. It's a positive. It's an uplifting comment sections where people can honestly feel safe about putting whatever question they like. They're going to get an honest answer from experts, but they're also going to feel like they're not going to get bombarded by somebody, if that makes sense, you know. And so please, if you're a negative person, go somewhere else. You know, you've probably got plenty of YouTube videos that you can go and watch. But if you are sitting there thinking, I've got really good questions, I really do want to ask Dale and Janine some questions, I really need some answers for that, please, you're welcome to stick them below. Just type out your questions down below and we will endeavour to answer them next week. As I said earlier, we can't answer every single question. This is something that Janine and I will do for free. We actually help people, well, we can't spend all our weeks answering questions on videos. It's just not what we can do. But we do try and pick the really good ones out of that. You will all get to top of the list. We will always do public subscribers will always answer those emails, those comments, because they're publicly subscribed to our channel. So you need to be a subscriber. So, but remember, on this channel we do these reports every single week on a Monday. We also do our live stream on a Tuesday night, where you can see Janine and I live on the Australian Stock Market Show between 7 and 8 p.m. We're also taking calls. So if you want to call into the show, you can do that. Just write down the number 0392909988. You can pick up the phone and ring us on the show and have a chat to us now. Remember, hit that subscribe button now. Click the bell on the right of it so you'll know when we upload videos. That's it for me. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck and good trading.